Okay, good evening and welcome back everyone to our options education market outlook session on every single Thursday evening. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and we have quite a bit to share with you here today as there have been some interesting trends that have emerged over the last week or so. So I want to discuss some of those with you as well as some of the ideas that we are currently looking at here for the Nordic markets. So before I go ahead and get started here, just a quick disclaimer. What we're discussing here today is purely for demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So let's go ahead and get right into it. We've been following the Stockholm S30 index for quite a few weeks now, ever since the initial sell-off for the coronavirus. And as of right now, we are still roughly in line with some of the levels that we spoke about last Thursday, which is the fact that we've had a significant decline down to about that 1250 level on the OMX S30. We've bounced back to roughly a 1500 level on the index, and it really has consolidated over the last few weeks in this particular range. And if we zoom in on this particular chart, what we notice is that over the last few days, as the index continued to make higher highs, momentum was making lower lows. This is something we talked about last week. And so far, the index has started to pull back within that 1500 range here on the OMX S30. There is a big gap that it filled here when the index broke below 1500 down to roughly 1400. It finally filled that gap, filled it, but is now starting to pull back. So we're still seeing underperformance here in this particular index as Sweden still is keeping their economy open. They've taken a very different approach to how to handle the coronavirus than most other countries. And I think we're starting to see some of those trends emerge. And I want to show you what I mean by that. Because if we look at the Copenhagen 25 index, the index is actually in a very different place. So if we look at the Copenhagen index, it did have a significant decline, just like pretty much any other world index. But if we look at it, it's back into that almost 1200 range, which if you notice, and I'll show you a chart here in a couple of minutes here, that was the level that was trading at before that November rally. So most global indices, spent quite a few months between August and November trading in a very range-bound market. And pretty much all global equities broke out here in late October, early November. And the Copenhagen index is back near those levels versus the Stockholm index is nowhere near those pre-October rally levels. So we're starting to see a trend emerge here between the Copenhagen and Stockholm indices as far as where we're seeing outperformance and underperformance. And we want to take a look at some of the coronavirus data to see if that's really why we're seeing this underperformance and outperformance. So if we look at the COVID-19 trends, unfortunately, Sweden had its deadliest day yesterday, 175 deaths. And if we look at a chart here of Scandinavia, all the Scandinavian countries, Sweden is currently in a category of its own in terms of number of fatalities. Pretty much most other countries have passed their peak anywhere from a week to 2 weeks ago. Sweden is still, as of yesterday, still peaking. Whether this is going to continue running higher or lower is yet to be seen, but it is an alarming trend right now for the process or the way that Swedes have decided to not shut down their economy and keep things open and hope that social distancing would be enough to lock this down and slow down the virus. But the other countries, Denmark, Norway, and Finland, have all locked down. And they have passed their peak in terms of number of deaths, in terms of number of new cases. Like I said, most of them have passed their peak a couple of weeks ago, and Sweden is still currently in that growth stage. So I'm actually curious, for those of you that are here on this session, for those of you that are in Stockholm, do you notice a general slowdown? How do things feel on the ground? Are you still going to work? Does everything still feel normal? Or do you feel that things are starting to slow down? Do you think that people are getting a little bit more worried about this particular case? If you have any comments, please type them into the chat window. I'd love to hear your thoughts as far as what you're seeing on the ground, because one of the things that we've noticed here is that if we look at the OMX S30 and compare it to the OMX C25, so the Stockholm versus the Copenhagen index, for a very long time, this index has been predominantly pretty much on par with each other. They tend to oscillate from one extreme to the next, but it doesn't really outperform or underperform, except for starting here in the beginning of March. At the beginning of March, the Stockholm index has continued to underperform the Copenhagen index. This shows me that the market is telling us something. The market is saying that for countries that are not locking down, they're expecting underperformance compared to countries that have lockdown. And as much as the lockdown may hurt an economy, what it does, the benefit to it, is the fact that you are able to reopen your economy at a fairly specific timeline, versus when you don't close down your economy. And again, we don't really have any other countries following Sweden's process. It's really uncertain as to when things will get back to normal, when people will feel comfortable enough to get back in the swing of things. And I'm curious to hear if anyone has any thoughts here for those of you that are on the ground in Sweden. So, this is the trend that I think provides some opportunity here in the markets, is this recent underperformance of the Stockholm index compared to Copenhagen index, as these two countries have taken a divergence in terms of the processes, how they're going to deal with the coronavirus. So some of the ideas I want to throw out here today relate to some of the Danish equities, as well as some of the Swedish equities that I think are going to either outperform or underperform in the coming months. So the first one I want to bring up is looking at the pharma industry. So pharma as an industry as a whole has actually been holding up very well throughout the coronavirus, simply because, number one, people need their medicine regardless of whether there's a coronavirus out there or not. And also, many of the pharma companies are getting a bit of a boost as money flows into the healthcare space. Many pharma companies, especially the larger ones, AstraZeneca, Novo Nordisk, have been performing relatively well. And this is a Copenhagen listed equity that has been performing very well. And I'll get to your comments here in 1 second here, but I just want to show you some of the ideas that we're currently looking at. So Novo, let's take a look at Novo. Trading at 422 Danish crowns. This stock, as you can see, is back near its February and March highs, starting to break out above 420 or so. So we're seeing some decent outperformance here. AstraZeneca, also same thing in the Swedish equities, outperforming. So some of the strategies that we're looking at is the fact that they are reporting earnings here in 20 days. And AstraZeneca, who recently provided guidance, not only has provided guidance, which is great because this is the information we've been lacking, but the fact that the guidance has, after providing guidance and the stock has rallied, provides a very bullish outlook, in my opinion, for some of these pharma companies, including some of these Danish equities. So some of the strategies we're currently looking at is potentially going out to June and buying a call or a call spread and looking at that specific strategy. As you can see, going out to June, I can buy a 420 call option, which is the at-the-money call, and sell a 470 call against it. So I'm paying 23 crowns for the 420 call, and I'm selling the 470s for 530. So roughly collecting about 20% of the underlying cost, which is actually a pretty decent premium to be collecting on something that's roughly 1 standard deviation away from the current price of that stock. And as you can see here, if the stock does rally back up to that 440 and starts to make a new high, as we're starting to see in AstraZeneca, you're looking at so if, let's say, the stock gets up to about 450, you're looking at about a 70% return on the call spread. The other strategy that you can look at, which is something we discussed on our market outlook session last week, if you want to watch that recording, is selling put credit spreads as a bullish strategy. So selling something like a 420, maybe 400 credit spread, for those of you that like to sell credit spreads or like to collect premium, especially when volatility here is relatively elevated. You can sell this 420, 400 call put vertical spread for 710 crowns, you're risking about 1,300 crowns, a little less than double the premium that you're receiving, which is a fairly, I would say, a fairly reasonable credit spread to be selling. We generally want to collect 1/3 of the width. So here, as a 400, 420 credit spread, that's 20 points wide. We generally want to collect roughly about 660 crowns. Here we're collecting 710 crowns, so 50 crowns more than we normally would expect to collect on this. And this is due to the higher implied volatility of some of these names right now. So those are the two strategies that I would consider looking at if you were looking at a bullish view here for a pharma company. So let's jump over to some of your comments here real quick. So David is saying Brazil has kept their economy open somewhat. Okay, so let's take a look at Brazil for 1 second. We're going to jump right back to the other trade ideas, but I just want to take a look at this. And Hans is saying, I think the difference from other countries in Sweden is that it's based on recommendations instead of directives, but the result is pretty much the same. We have more of a social lockdown because social pressure on how to act. Okay, so that's sort of what I was expecting, because most of the people that I speak to in Sweden have said that, you know, their companies have told them to work from home. They've generally told them to try to stay away from public places, but they haven't directed people to do that. And I certainly agree. But as you can see, the trend here in Sweden is a little different than the other countries, which is the alarming part. And from my perspective, Sweden could very well stay its course and work this through the system in the next couple of weeks. There's absolutely the possibility of that. There's also the possibility that they do take some directive in providing some social pressures as to what they're going to force their citizens to do. And if they do that, you know, the problem here is the fact that if they do, that's going to cause, in my opinion, a sell-off here in Swedish equities, whereas opposed to you might see some outperformance or the other equities stay flat. So Brazil, as you can see, is still also growing, despite having, as you said, a more of open economy. They didn't really see any real cases until March 24th or so. So we usually kind of track these after you see about 10 deaths or so, you know, trying to see the peak from there. As you can see from the 24th to now, you know, this is still decent. This is still growing, right? There isn't a clear trend that this is slowing down. So, you know, that's some of the data that we have to look at. But, you know, Hans, David, I hear your point as far as what you're saying. I think what I'm trying to state is just that there is that additional downside risk that maybe Sweden, seeing this data, says, hey, we're gonna tell people to stay home for a couple of weeks, and that's certainly going to be a notch down or downside risk to Swedish equities that didn't exist prior to the data that we currently have. So that's what I'm trying to say here. The next one I want to take a look at is beer. And the reason I want to take a look at beer is, generally speaking, beer companies tend to be more of a recession-proof stock. So especially when we know for a fact that the global economy is heading into a recession, there's no doubt about it. And this recession is going to be unlike any other is going to be like any other depression that we've ever gone into, simply because of the sheer magnitude. It may not last as long. We may be pulling out of this in late 2020 or early 2021, but the sheer magnitude of the economy slowing down is we have never seen before. But generally speaking, vice stocks, usually tobacco, beer, in countries like US and Canada, marijuana stocks, these are the stocks that generally tend to outperform when we go into a recession. So Carlsberg being this is another Danish equity that we're going to take a look at. Whoops, am I using, yep. So I was looking at Carlsberg because, again, beer companies tend to be a little bit more recession-proof. It currently is doing fairly well in terms of relative strength. Looks like it's about to break out. It's still got a bit of upside here. My preference here in terms of playing a upside on Carlsberg, because as you can see, the 1 month trend has turned mildly bullish. The 6 month trend is still bearish. But what this is telling me is that short term, things are starting to turn around. I'm not 100% sure that this is going to rally significantly, which is why I think from my perspective, I wouldn't necessarily go out and buy call options. I think I would use a premium harvesting strategy, such as selling a credit spread. In this particular case, same thing, maybe selling the 810, buying maybe the 8770. As you can see, this is a 40-point wide credit spread, and I'm collecting 1380, which is roughly 1/3 of the width. This is the type of strategies that I would typically want to trade, and my break-even price on this is 796. So as long as Carlsberg stays, around this range, moves a little higher or moves a little lower, I'm going to be profitable here. Because if I buy this call option or I buy this call spread, as you can see, my break evens are 847, 852. So the stock really needs to move a significant amount higher before I can be profitable on that trade. And, depending on what your views are, I certainly think that beer companies are more recession proof, but that doesn't mean that these stocks are going to rally per se. That just means that they are likely going to outperform the markets. But if the market stays flat or the market moves down a little, these stocks can also stay flat and move down as well, just perhaps not as far down with the market. So if I was playing something like a Carlsberg beer, I would be looking at a strategy where I'm selling premium rather than buying premium with calls, but rather I'd be selling puts. And lastly, some of the other strategies that I want to share with you is, some of the Swedish banking stocks. These are stocks that are really starting to underperform. Even as the markets rally, they have not kept up with the rally. They've actually severely underperformed here. So some of the names that we really want to take a look at is, whoops, not Swedish Match. Swedbank. So many of you in Stockholm, you're obviously familiar with this stock, but as you can see with the sell-off, the stock has not rallied with the rest of the market. It's trading sideways and is now starting to break down to all-time lows. This reflects some of the negative guidance we've seen from the U.S. banks, which have just started to report earnings. JP Morgan, Bank of America, Goldman Sachs, these names have all reported earnings, and they have seen a substantial slowdown. Their guidance that they've provided is dismal. To say it's dismal is an understatement. The write-downs that they're already doing on their loan book, just in terms of what they're expecting to see in the next few weeks, the next few months, is scary, to be perfectly honest. Now, I will say these banks, financially, they're going to be okay, but we're going to see a substantial slowdown, and the bank's pricing is reflecting that. And what we're currently seeing this is Swedbank just broke below its support level. It's now trading at 101.88. And we think that this underperformance is going to continue to happen until Sweden has a better understanding as to when things are going to get better for their economy. Unlike Copenhagen and some of the other Nordic countries have already started to plan reopening their economies. So there are a few ways that you can play this. You can buy puts, which I think I was looking at some strategies here before, makes some sense. You can look at buying a 102 or maybe even a 100 put option for 8 crowns here going out to June, selling the 80 crown put against it for roughly 2 crowns. You're collecting almost 25% of the long put, which is a nice amount of a premium to be harvesting here, paying only 6 crowns effectively for a 100 crown stock. So you're paying 6% of the underlying stock price. In my opinion, in this current highly volatile environment, that's actually not an expensive premium to be paying to take advantage of a potential downside move in these potential stocks. You can take a look at selling some options here as well. So let's take a look at what that looks like here. If I sold, let's say the 102, 110, I'm collecting 320, which is substantially larger than the 7.5 point wide credit spread here. So 102.5, 110 is a 7.5 point wide credit spread. For that, normally I'm looking to collect $202, $250. Here I'm collecting $320, so I'm collecting 70 crowns more on this particular credit spread. So that also is a decent way to play that. What's interesting about this is that your break-even price is 105.70. So as long as the stock stays below 105.70, you're going to be profitable on this trade. And you're only risking 430 to try to make 320. On a credit spread, that's a very good risk to reward ratio. Normally, the risk that you're taking is normally double the reward that you're collecting. So in this particular market environment, what's really interesting for those of you that have a little bit more experience trading options is the fact that the out of the money call options that you're purchasing here, the 110 call options, they're actually trading at a very lower, they're trading at a substantially lower implied volatility. So it's actually costing you a fairly small amount of capital to buy that out of the money call option to reduce your risk. And that's actually increasing the rewards that you could potentially collect on a credit spread. So this is one of the few opportunities in the markets where you can, generally speaking, collect more premium than you normally would, despite the fact that volatility is higher here in the markets. Normally, these out of the money call options, when volatility is very high, would be elevated, and it would reduce the premium that you collect on a credit spread here. So, an interesting opportunity right now in the option markets that, not a lot of things are normal, but that provides some opportunity for us here. So that covers the ideas that I wanted to share with you here today, the observations that we're currently seeing in the market. Like I said, the OMX S30, the underperformance of the OMX S30 versus the Copenhagen 25 is really, I think, the very interesting thing to look at here. The fact that you had a very strong support level here, where the OMX S30 and the Copenhagen always traded lockstep with each other, but in March 1st started to break down, retested this level, started to break down again, came back higher, and is starting to move lower. I think this is really the big theme to be paying attention to right now, as these two countries have taken divergent methods to dealing with the coronavirus, and the markets are telling us something about that. So at this point, what I'll do is I'll open this up for Q&A. If you guys have any questions around anything I discussed here today, any of the strategies, any of the names, I'm happy to discuss those things with you. So David had a couple of comments here. Novo is a great play with the pandemic of diabetes. I'll be honest, I don't know a whole lot about the Novo portfolio in terms of drugs. It's not a US company, so I'm not following that as heavily. Interesting note that he said that, that alcohol sales in the US is up 243%. We've certainly seen a lot of that in terms of, at least here in the US, restaurants and bars have closed down. So people need their alcohol somewhere, and they've been buying it up from supermarkets, and that's why supermarket stocks have been going up here in the US. Same thing in the last week, we covered Axe Foods in Sweden. Axe Food is still hovering above that 200 level, but still one of the strongest stocks in the Swedish markets. Swedish Match also. So Vice stocks, alcohol, tobacco, beer. Generally speaking, these are the types of stocks that generally do well in this type of environment. I was wondering where we can find the previous recording of all of these series. Great question here. So I'll shoot you the link here. You can find a list of all of our videos, and I've just sent a link to everyone here in the chat window. And you can look at all of our previously recorded videos. So the last week that we covered here was on April 8th. From a week ago, we covered both. We covered multiple ones last week. You can keep going back and you can take a look at all of the different outlooks that we've done 2 weeks ago, 4 weeks ago. We've been doing this for quite a few weeks. So if you want to take a look at that, I'm happy. I highly recommend you to take a look. I just posted the link in the chat window. David's saying Volvo builds in Charleston. which is a city in South Carolina in the US. So I would imagine that that is, I'm not, I'll be honest, I know nothing about Volvo and their factories here in the US, but certainly the price tells me that, you know, this is turning a little lower here. You know, it got rejected around that 130 level. If you're looking for a short, you know, I would target maybe this $96 level here. Buying a put spread here is actually quite inexpensive. Wow, really cheap. 120 crown stock, a put option here only costs you a little less than 500 crowns. This would certainly be a very, I would say, inexpensive way to take a directional bet that Volvo is going to move lower. So for David, if you think that Volvo is going to move lower, I would be looking at buying a put option here just because it's fairly cheap. Request for future if you haven't covered game stocks. I don't know that there are any game stocks here in the Nordics. If you can think of one, I'm happy to take a look at it. I unfortunately don't know of any gaming stocks here in, even though MAG Interactive, is that a Swedish? Okay, let's take a look. So what's interesting about the gaming stocks is that the gaming stocks have been doing very well in the US. So if you look at the big names like Activision, you know, rallying today, EA Sports, Electronic Arts, these are the big names in this particular space, also rallying, breaking above that. And these are stocks that have really underperformed the market for a long time. As you can see, you know, throughout the rally, these stocks have not performed. Take-Two as well here in the US. You know, very similar trade, interesting trade that I had back then. All breaking out to relative highs in the recent days. So MAGI, which is a Swedish stock, let's take a look at it. As you can see, the chart looks very similar to Electronic Arts, Take-Two, Activision, Blizzard, the big names in this particular space. But if we look at the stock itself, now this doesn't list any options. So I don't really have an option strategy to share with you, but from a relative strength perspective, these stocks certainly seem to be outperforming the overall market. Mostly, you know, similar trend to Netflix, Disney. Why these stocks are outperforming? It's because as people are shut, you know, in their homes and they have nothing else to do, they're turning to streaming video, they're turning to games, they're turning to buying puzzles and toys, whatever it is that people do to keep themselves sane, as they say, indoors. So gaming stocks is certainly one of the, I would say, benefactors of the coronavirus. Evolution Games, again, not a stock that I'm familiar with, but let's take a look. Evolution Gaming, okay. Look, if you look at the chart, Evolution Gaming looks very similar to some of the other ones, actually substantially better than some of the other ones. Whoops, Evolution Games. Wow, that's a pretty good looking chart. That chart reminds me of some of like the, you know, the grocery stocks that we're seeing here in the US. All-time highs breaking out above 425. So that breakout above 425, I would say, is certainly significant. My only question is, how far does this continue to go? You know, this doesn't pay a very large dividend. It's trading at a fairly, I would say, expensive valuation at 51 times earnings. So I would question how much higher this would go. So if I was taking a bullish view here, I would prefer probably to sell premium rather than buy premium, just because I'm not sure how much higher this thing can go. If I sold something like the 450, 420 credit spread here, 30-point credit spread, normally I'd be looking to collect about 1,000 crowns here. I'm looking here, I'm only collecting 1,040 crowns, so just roughly exactly what I would normally expect to collect, risking a little under 2,000 crowns here. And my break-even price here is 439, which means that as long as the stock stays above 439, I'm going to be profitable on this trade. So it gives me a little bit of downside. So if this pulls back a little and then starts to, you know, stay range bound. So, 425 is kind of, the 425 is the major support level here. So if you get a little bit of a pullback and kind of trades range bound, this type of strategy would be suitable, selling that credit spread as opposed to buying premium.
Leo Vegas, I'm not sure that particular name. Also not a name that I'm familiar with, but you know, if you look at, doesn't have options on it, but you know, it looks very similar to the other stock, the Evo game stock that I was looking at before. A lot of these gaming stocks, again, still outperforming the overall market, but I don't know how long this outperformance is going to last, right? Because you know, there's a part of me that thinks that as soon as we're able to go back outside and you know, I think people are going to flood to go outside. People are going to, I think there's a part of us that, you know, as those of us that have been stuck indoors, as soon as we're able to go out, I think we're going to try to take advantage of that. And that might cause, you know, a bit of a depression in some of these stocks that have, in the short run, benefited from people staying in. Yeah, I completely agree. How long will that take? I don't know. But I mean, if we look at, I would say the countries that have locked down and they have seen their peaks in the last few weeks. You know, I live in New York, which is one of the most heavily hit, one of the most heavily hit areas in the whole world. And we peaked about a week ago in terms of number of deaths. And I think realistically, we're looking at perhaps a June, July timeframe where people can start going back to work, right? So, you know, the thing is that once you have a peak, you can start planning for it. If you haven't peaked yet, it's really difficult to draw out a timeline. But, you know, if we look at countries like Austria and Czech Republic, they've already started to open their economies up because they've passed their peak and they can start planning for that. So it really comes down to planning for your peak. You know, Ericsson for 5G. So, you know, the interesting about the interesting about telecom and sorry, Eric B. The thing about telecom and electronics is that it's been fairly strong, at least here in the U.S. These stocks have been doing very well. Ericsson, you know, also holding up very well considering everything that's going on. So I certainly don't think that this is a short candidate at the moment. Relative strength is very strong, telling me that it's outperforming the overall market. As you've seen, we've had this strong rally. Maybe if you want to take a bearish view, I would be looking at selling some premium here as well. I think regardless of whether you take a bullish or bearish view, I would take more of a premium selling strategy rather than premium buying. I would be looking at selling credit spreads, whether the bullish or bearish side. A lot of comments here. Thank you so much. I really appreciate you guys taking the time out here today, listening to, you know, this market outlook, providing your ideas. You know, I love it when you guys provide your ideas and your thoughts and your symbols, and we take a look at it together, because this is really how we learn. We learn from each other. We take ideas from each other. I share with you kind of my thoughts, as well as show you how I would trade those if I was in your shoes. And this is really designed to help you guys give you a better understanding as to how to utilize the derivative markets to take your directional views, especially in these types of volatile times. All the strategies I talked about here today are limited risk strategies, so that no matter what happens, even if you're flat out wrong on the direction, you have limited risk so that you don't blow up your portfolios. So we really want to focus on those types of strategies and help you understand how to play these markets using derivatives. So with that, thank you so much. I hope you guys have a great evening. We will send out the recording to you guys in a few minutes once we finish processing it. And I hope you guys have a great evening. I'll see you guys next Thursday, same time, on our next market outlook. Have a great night.